All right. So welcome everyone. It's nice having you guys here. Sorry, I didn't release a video this week because a friend of mine was actually getting married, and I was there for him on Saturday. Was his traditional wedding, so I had to turn up and all of that. That was my secondary school friend. So after that, we went for an after party. I came back home around 5 a.m. and I woke up. I tried to do the recording on Sunday, but I was still having a little bit of hangover. So I said, you know what, I can't perform this way. So instead, I'll just convert it to a live session. All right. So now we are here. I'm going to take questions because I don't want this to be too lengthy, as I'm going to be posting it on YouTube later, the recordings. Let me confirm quickly if I'm recording already. Let me just reconfirm. Yes, we are 1 minute in. So write down your questions along the line because I'll be as fast as possible and as detailed as possible also. So as usual, on the weekly analysis, I usually start with gold most of the time. So I'm going to be starting with gold once again. Meanwhile, just a quick recap from last week. Remember even on my thumbnail, if you remember my thumbnail on YouTube. But before I continue, let me just make sure you can hear me and you can see my screen. So just indicate I noticed Mr. Adolphus. Please, if I pronounce that wrongly, please forgive me. I'll allow you to speak. Just quickly confirm if you can hear the sound of my voice and you can see my screen, please.
Yeah, I can see your screen.
Okay, thank you, sir. Thank you for that. So, okay, you can go back to mute yourself so that we can have a quiet class. I see some hands raised. I'm going to call you maybe at the end of the analysis. All right, so gold, I'll start from the weekly time frame. So usually when I conduct this weekly analysis, I like to start from the higher time frames to be able to generate a directional bias for the week. Obviously, last week, looking at the last week's candle, this is a new week, by the way. So this was last week's candle, right? So we're still bullish, right? And if we continue bullish, of course, 2,789.059 will be our initial target on the weekly time frame, right? We can't deny the fact that gold is in a strong bullish trend. However, I need to find a trading opportunity going into next week because it's one thing to just do your analysis, but the way I do my analysis, I do it to the point of taking a trade. And that's exactly what I'm going to be doing today. All right. So I'll go back to the daily time frame since I already have a directional bias just by looking at the weekly time frame candlestick with which we closed for last week. Now, on this daily time frame, you don't want to ignore this resistance here. All right. You don't want to ignore it. It has been tested multiple times historically and price is back there. So you can't just ignore it because this is happening on a much higher time frame. For me, I consider the daily, weekly, and the monthly time frame as the higher time frames. Then for lower time frames, I drop from daily to the 4-hour time frames and below. Yes, I'm recording, sir. I think this is coming from the mentorship evening class. I don't remember. Yes, I'm recording, sir. Yeah, let me go back to my analysis. All right. So, sorry, a student of mine just asked me to make sure I'm recording. Okay, yes. So you don't want to ignore this daily resistance here. So even if we are going to continue bullish, we have to take out this resistance area, right? So now there are two possibilities from here, right? Price could either break above this zone. At least I know that if price breaks above 2,725.157, I know that I am in the clear to trade to the weekly zone. Number one, the overall trend is bullish. We only have a roadblock right above us on the daily time frame. So for us to make our way to that weekly target, which is all the way up here, we have to take out this daily tumbling block, right? That is staring right in front of us, right? So now I also don't want to rule out the possibility that price may drop. You understand? Because you don't want to be stuck in that mindset that, hey, it's in a bullish trend, price is just going to go bullish. As a good trader, you should be able to determine the other possibility, the other scenario that should price drop, how do you take advantage of it? Because historically, I mean, when price was approaching here historically, it was in a bullish trend. Gold was in a bullish trend. But look at the massive sell-off. When we attempted it again, observe the massive sell-off. All this period that this massive sell-off was happening, we are still in a bullish trend. And now we are there. So there's another possibility that that could happen. At least we know where we'll buy if price continues higher, which is above 2,725. Now, I want to look at the bearish possibility. So to do that, I'll drop to the 4-hour time frame. But before I drop to the 4-hour time frame, I remembered analyzing with some of my students yesterday, Sunday, when I said, for the time being, I will be buying gold from here. And I'll tell you why. That I'll be buying gold from here. Why? Simple market structure. From this point, price created a high, a higher low, a new higher high, a new higher low, a new higher high, a new higher low. Watch how price is. Let me start from the top again. From this point, a high, a higher low, a new higher high. Watch how price came back to retest this previous high here, right? And when price went on to create a new higher high, watch how it came back to retest the previous high. And now it has gone back up to create a new higher high. I remember yesterday night, I was telling those on the mentorship program that I would like to buy from here again, 200689.082. Why? Because I'm going with the pattern that gold has been given to us for the past couple of weeks. And notice how that bounce happened. And I told them that I will be buying back into this daily resistance here. All right. And I'll be taking profit there. Why? Because price is still struggling to break above here historically. I mean, the last time price broke above this upper region here was in October last year, when price made its way to this higher point here. Since then, price has not made a higher move higher than 2,725. All right. So sorry, this is a live session. That's why I'm going into a little bit more details. On the normal analysis, time is of the essence. I don't get to explain in details because I want to cover as much currency pairs as possible. So bear with me. So I was like, okay, my next target will be here if I buy from here. And how do I take advantage of that? I'll take advantage of that on the 4-hour time frame. Sorry, on the much lower time frame rather, not the 4-hour time frame. All right, though I woke up late because I think I'm still struggling from that fatigue of the last weekend. I couldn't take advantage of the trade. All right, I couldn't take advantage of the trade. I woke up late and I noticed that we're already trading close to my target. So it's pointless chasing the trade. All right, but if I was awake, I would have taken the trade. And some of those students from yesterday night already sent in their screenshot that they took the trade on a much lower time frame. I think 30 minutes or 15 minutes time frame. Though I usually tell them that if you're still struggling with execution, stick to the 4-hour time frame. But I think some of them just believed what I said and dropped to a much lower time frame and they took the trade. All right. But all I'm saying is, going into next week now, we should have bought, if I had jumped on the analysis, we should have bought this to this target here. We should have taken profit by now. But since price is at this point now, so this is what I'd like to see. I will wait. I'll wait for price to break above 2,725.157 to now start buying. So basically what I'm talking about is I want to see a continuous bullish momentum to the upside. Then when that happens, when we have a candlestick close above here, then I'll start looking for the pullback. All right. So within these 2,725.157 and 2,713.880, right? Anywhere within these two zones, I will look for buying confirmation. And then my next target would be 2,790.209. Anyone, maybe 2,790.209 or 2,000. I don't even know why I have two lines there. Let me just delete one. All right, 2,790.209. We can use that as our target if price eventually breaks above 2,725.157. All right. Then for bearish scenarios, I would like to, because the dominant trend is bullish, so bearish scenario, for targets for bearish scenario is going to be shorter. That means I would wait for price to break below 2,689.082. And I'll tell you why I'm also looking at that bearish scenario. I said that earlier, but I'm just going to repeat myself for emphasis sake. So I'll sell below 2,689.082, right? That means should price continue lower, I'll be patient enough for price to break below this region. Then I'll switch over to a much lower time frame and wait for that pullback, right? Let me make this area a zone. Let me make this area a zone. Cool. So I'll wait for price to break below 2,693.821 and 2,689.082. When price breaks below on that 4-hour time frame, then I could go to the 15 minutes time frame. I'll even give you a simple strategy. I'll go to the 15 minutes time frame, wait for stuffs like bearish engulfing candlestick pattern, or maybe double top. Double top, I don't think double top will be effective in this scenario because from point of entry to target is quite tight. So you want to maximize in a way that you can make good profit, right? So you want to enter as early as possible. All right. So these are the two scenarios I'll be looking for. And why am I looking at that possible bearish scenario? Once again, is because if I go back to the daily time frame, price historically has bounced off this daily resistance area significantly in the past. So that's why I'm even looking at the bearish scenario in the first place. All right. So that's what I'll be looking out for on gold going into next week. So before I go to the next pair, I'll probably be analyzing maybe okay, this is just 11 minutes. I could spend 30 minutes on this analysis. So let's see how far we go. If I could analyze just 3-4 pairs, let's see how far we go. But let me take a question. Let me take one question on gold. All right. So if you have any question on this gold analysis so far, just indicate by raising up your hand, please. If you have any question on this gold analysis so far, please go ahead and indicate by raising up your hand, and I will unmute you to speak. I'll give 5 seconds for that. So okay, I'll give 5 seconds for that. So if I can't get any, okay, I see Mr. Miles' hand is raised. Is that, am I correct, or is that just an emoji? Let me see. Let me just double check. I saw a wave just now. Okay, I think he's gone. So I see big firms. All right, big firms, you've been allowed to speak, sir or ma. Kindly unmute yourself and ask your question. So all you need to do, you see that mic icon, try to click on it to unmute yourself. Big firms.
Good day, sir.
Good day, sir. Nice to have you join us.
Okay, so for the gold, so what are we? So how long are we going to wait for? Like, what's it like the time frame? Are we to wait for the price to come to these our zones that you've picked?
Okay. Okay, yeah, that's a very good question. So I would suggest you watch out on the 4-hour time frame. Observe on the 4-hour time frame for price to break out of either of these zones. Then when it breaks out, you know what to do next. You know you are now anticipating a pullback. So when that pullback is happening, for me personally, there's a way I can better time my entry on the 15 minutes time frame, 30 minutes time frame. But for those that are struggling, sometimes I want to advise you wait on the 1-hour time frame or even the 4-hour time frame. Sometimes it all depends. But for observation, wait on the 4-hour time frame. All right. So if we see that massive breakout on the 4-hour time frame above here, we know that okay, on a much lower time frame, we're expecting a pullback. All right. And if it breaks below also, we're expecting a pullback. The most important thing is to have your zones plotted out. And that's why I usually identify those zones using these red lines so that you can easily put them on your chart, right? So once you put them on your chart, you have my zone on your chart too, and you know what to wait for when price breaks out of them.
Sorry, sir. Please, the reason why I'm asking that is because I'm not always glued to my screen. right? So
Okay.
that's why I'm asking like how long? Maybe I can just time myself. Okay, in the next 3 hours, in the next 4 hours, let me go and check the chart and see what's happening. Then I'll go back to what I'm doing. Then in the next 4 hours, so
Okay.
that's what I was asking. What was like the
It's simple.
time?
Yes, I understand your question. So it's simple. So two things I do is, if I'm going to be observing on a 4-hour time frame, like I just recommended you should, what I do is I check at every 4-hour interval. So even though I'm busy, because even though I really don't do much, all I do is trade, right? And any other side hustle I have is actually I do it from the process I make from trading. So even at that, I'm not glued to my screen, right? I could do that, but I'm not glued to my screen because it's boring to do, right? So what I do is I usually monitor on every 4-hour cycle. If you go to my mobile phone, I have alarm from 7 a.m. when I wake up till 6 p.m. when the market is, at least because I'm in West Africa, Nigeria, of course. So when it's about 4 hours to the close of the New York session. So usually what I do is I have my alarm set for every 4-hour cycle on the chart. So, and I set it 15 minutes before the close of that 4-hour candle. So when my alarm rings, all I need to do is just to check on my phone to see where price is. Then another thing I could do is to set an alert on TradingView. All right. So if I'm hover my mouse around here, if you can see my mouse, now I want to see price break above here. So what I'll do is I'll just set an alert. All right. Let me click out of here. So look at the far right here. You see there's this plus sign. If I click on it, add alert on gold. If I just click on that alert, you see some dotted lines from end to end. So when price gets there, I'm going to receive a notification. So now I want to now observe, because now I'm putting it above my zone. So it's going to remind me that, hey, price has eventually broken above your zone. And if it's below here, I could set another alert on TradingView by clicking here. Just easy to do. One click, add alert, boom. You see I have another line below. So, but I'll recommend you go with the first option. Always look at the 4-hour cycle. So if you want to observe on the 4-hour cycle, then if you hover your mouse on any candlestick, depending on your time zone, it doesn't matter. For me, this current 4-hour candlestick that my mouse is currently on started around 11 a.m. So which means count from 11 a.m., 11 to 12 to 1 to 2 to 3. So which means this 4-hour candle is going to be fully formed by 3 p.m. You understand? So I know that, okay, the next time I get to come and look at my chart will be by 3 p.m. Then if I still don't get what I want, I know that from 3 p.m., the next time I need to open my chart again is by 7 p.m. So that's how I monitor trades. You understand? Anything between that 4-hour cycle, I don't look at it, but I come maybe 10 minutes before the close of that 4-hour candlestick to see if price is now where I want to see. I want it to be, if that makes sense. So I hope that's clear, sir.
Yeah, thank you, sir, for the insight. I really appreciate it, sir.
You're welcome. All right. So I'll go to the next analysis. Yeah, I think people love GBPJPY. So GBPJPY also, oh my goodness, maybe I need to send out some videos of this analysis, because I didn't take this trade too, because I woke up late, actually. But I remember that I told them to also buy from here. But let's break it down. GBPJPY, and price is going high. I said they should put their stop loss here. Actually, put their stop loss here. At the time, price was trading where I think around here. Yeah. So I said yes, they could buy. But let me break it to that point where I told them they could buy. Right. I think I analyzed it on the different charts. All right, sorry, not a different chart. Let's do it here. All right, so I'll start from the weekly time frame. And I want you to notice that on the weekly time frame, price is trading at a support level. Price is trading at a support level, right? If I move this further left, you can see price is trading at a support level on GBPJPY. And I told them that, hey, price is currently in a bearish trend. I mean, if you go to a much lower time frame, But if you look closely, give me a second, please. I think my AC just tripped off. Let me try to turn it on. All right. So sorry I'm moving quite faster. You know, this is not the class. In the class I usually go slower, but this is just a live session, live analysis. It's recorded anyways, and it's going to be posted on the YouTube channel at the end of the session. All right. So I said yes, even though for the past couple of weeks, because we're on the weekly time frame, so each of these candlesticks represent 1 week of price action. So for the past 3 weeks, we've been super bearish. However, we are now at an area of support. So two things can happen, right? If price was trading around here, I will still be bearish to the support. But now we are on the support on a higher time frame. Do you want to ignore a support or resistance on a higher time frame, or demand or supply level, depending on what you choose to call them? Demands and supplies, support or resistance on higher time frames are more reliable than the lower time frames. You can ignore those on the lower time frame and get away with it, of course. But you see, when they happen on the, not even get away with it, I could draw a bias from the weekly time frame and ignore its support level on the forward time frame. Yes, I do that. You understand? So, but you see, key levels on higher time frames cannot be ignored. Of course, going into next week, price could easily just break through it and continue lower. That's a high possibility. But for the fact that we are on that support level, do you want to ignore it? Definitely not. I won't ignore it. So there's a chance, there's a possibility that price could continue higher, that price could close bullish for this week. All right. So that was where I drew my possible bullish bias on GBPJPY going into this week. But if price continues bearish, I already know what to do. I know that I'm going to be selling GBPJPY below 189.947. At least I know where to sell. Because as a good trader, if you don't know where to take action, then you don't even have a game plan. You just go by candlesticks. If you just see price pushing higher, you want to buy. You see price dropping to the downside, you want to sell. You don't have any game plan. And without rules in this market, it's a recipe for disaster, okay? So if at all price continues lower, I know where to sell, which is once again below 947. So if price breaks below it on a much lower time frame, I'll capitalize on the pullback and sell. But this bullish scenario, why am I even looking at that? It's simply because price is trading on the weekly time frame on the support level. So I'll go to the daily. So on the daily, on Friday, just like my students already knows, that I usually like to simplify things. Many people will call this type of candlestick that we close with on Friday a different type of candlestick, but for me, simplicity is key. I just call it a doji. Yes, on textbook, on paper, this is not a doji, right? You will agree with me. This is not a doji, but they've been able to identify what I perceive as a doji. You understand? Even when it comes to bullish engulfing candles, there are some hammer candles. I just tell them that instead of stressing myself, this type of hammer candlestick, I just consider it as a bullish engulfing candlestick, and they work for me. All right. So yes, this is not a textbook definition of a doji candlestick. I agree with you. So there's no need to drag me on that. But for me, I will just classify this as a doji. You understand? I'll just classify it as a doji. So a doji, which is an indecision candle at an area of support, shows that those sellers that were dropping the price are beginning to take profit. And the buyers are beginning, because of course, when you're taking profit is an order. The market sees it as an order. If you were selling and you are now taking profits, the market sees it as you're buying. Because if you're selling something, someone is buying, right? So, first of all, on the daily time frame, price gave us a doji candlestick. At least in my books, I consider this a doji, right? So, price gave us a doji candlestick, which is an indecision candlestick. So, why are the sellers that were so active on Wednesday, on Thursday, were now stalling on Friday? That's to show you that they are also looking at that support level, right? So now what do we do? I'll go to the 4-hour time frame. Meanwhile, last week, if you watched my last week's video, you remember that my analysis was to see price pull back into here before we sell off, which actually happened. All right. I was actually thinking price would continue lower, but price broke back above that zone. And now a change in market structure has happened. Look at this low, lower high, new lower low, right? If you look at this bullish engulfing candlestick here, it's higher than all this. Oh my goodness, I don't have time to break this down to the smallest, to the tiniest particles, but this candlestick is higher than the bodies of these other ones below it at a weekly support area, right? So to me, I want to classify that as a new higher high. And that was why I say, hey, when the market opens, you can just buy. You can just buy. And I believe they're in profit, though not even up to 1-to-1 yet, right? Not up to 1-to-1 yet, if you look at this, but at least they're in minimal profits already. At least if they risk $100, they have $60 in the bag already right now. I'm talking about where price is. All right. So now in this scenario, I don't care if I lose the trade. The only thing I'm focused on right now is I've done everything humanly possible within my system to be bullish from this point. Of course, my first target will be back to the stop here. I don't care if I lose because my stop loss is here, because I know that if I lose, I'm now going to switch and realign myself with the dominant trend. Because why was I buying in the first instance? I was buying because on the weekly time frame, we were sitting on a support level, and I didn't just take that buy trade because I'm sitting on the support level. I actually took the buy trade because I looked at the shift in market structure. I mean, it's not quite obvious on this 4-hour time frame. So probably if I drop to the 15 minutes time frame, you'll see that shift in market structure, right? This was when price poked out below. Then look at how it went up to create a new higher high. Then these are all the pullbacks, and we've been bullish ever since, right? So all I'm saying is I have prices on a weekly support. I have seen a change in market structure. It's time for me to take action. Now, I don't care if I lose the trade, because if I do lose the trade, I know that I'll recoup my profits below that weekly zone and then trade all the way to the downside. We cannot win all our trades. That's one reality about trading. We cannot win all our trades. That's the difference between the consistently profitable traders and the struggling traders, because the struggling trader wants to be right 100% of the time. The consistently profitable trader doesn't mind if he or she is right 60, 50, even 40% of the time. All right. They are willing to give the market the 60% loss, take 40%, but they know that 40% are monster trades. It's going to always make up for the losses and even make and turn losses into profits in their books. All right. So only struggling traders are looking on YouTube. On YouTube, they're looking for 100% winning strategy. All right. So that you can't find that anywhere. Trust me, you can't find that anywhere. So be open to taking a loss, but the most important thing is sticking within your rules. All right. Your rules of engagement, and that's going to keep you consistently profitable over time. So our time is fast spent. I think let me just look at one more major pair before I take questions. EURUSD. Yes, EURUSD is also very important. I actually took a sell trade because I was bearish minded last week. Minded last week on EURUSD. Sorry, all this thing is messed up. I was explaining some things in the class. I'm going to clean up the chart real soon. But I knew that price was going to go bullish, at least for this week. And I'm going to break it down to tell you why I thought so. So because of that, the sell I had from last week, I closed it. Meanwhile, let me show you. I think I have a screenshot of that trade that I closed just this morning. I wanted to close on Friday, but I forgot. All right. Thankfully, let me see. Let me stop sharing. Let me stop sharing. Then I'll share my whole screen. Or let me share this guy or this one. Yeah, share. Okay, cool. So yeah, this was the trade. You can see I closed it today. Today should be 20th. Yeah, 20th. So I closed it this morning. I took the trade a couple of days ago. You can tell by my swap fee, right? $30. But I closed just this morning when I woke up. I closed this morning and price took off from there because I knew that though when I sold, I had a different target. I was thinking price would play out before the close of the week. But give me a second. Share this. All right. So I took profit around here because I knew the price will most likely go higher. And I'll tell you why. This is where I'm actually waiting for a buy. Price is beginning to move the way I want to say move. So I'm waiting for pullbacks and then I'll take the trade. I'll tell you how I arrived at this bullish scenario going into next week. I think those on the mentorship already, they already know this. They already know this. So usually we look at candlestick patterns. So we just actually concluded this topic on how to analyze last week. I think, okay, I'm not sharing my whole screen. I would have taken you into one of our groups so that you see what's happening. But what I'm trying to talk about here is usually, let me just give you a little snippet here. I usually look at candlestick, the nature of the candlestick with which we closed for the previous week. So seeing the way we closed for last week here, because I'm on the weekly time frame, seeing the way we closed for last week here, I was bullish minded. And not just because of that, I was bullish because price, of course, the dominant trend is bearish, right? Price just created a low, a lower high, a new lower low. So now we are seeing a bullish candlestick for last week. See, you may not understand everything because we spent 2 weeks on this topic in the mentorship program, but I'm just trying to give you a snippet on how I arrived at this bullish scenario going into at least this week, right? So now I want to see price using simple market structure pull back into this 1.04163 area. Then we may continue our bearish momentum to the downside. I'm not saying we are not bearish, but I need to trade this week. So I need to look for trading bias. I need to generate a bias for the week. You understand? I need to generate a bias for the week. I know we are in a bearish trend, but as a good trader, you should know when to. The price is not just going to go in a straight line. Price will go from $1 to $3, probably go down to $2, then take off from $2 to $4. These things happen. But as a good trader that have a solid game plan that has worked for you over the years, you should be able to tell where to do this or that. So going into this week, I am more bullish than bearish, not because we are not in a downtrend, but because I have seen certain things within my system that suggest that even though we will continue bearish sooner rather than later, but I think for the time being, we may be bullish at least for this week. At least, even if it's just for this week, or maybe next week, depending on how we close for this week. But I am bullish for this week. Of course, I'm not ignoring the bearish scenario, so I'm going to give a bearish scenario also. So at least I know where to buy and where to sell. So first of all, I've been able to determine my bullish target on the weekly time frame, which is just a tight spot between here and here. Now, how do I take advantage of that? I'll go to the daily time frame. Meanwhile, let me go back to that weekly. Okay, sorry, let's go back to daily. So on the daily, why do I have this red line below here? Okay, I could see that historically, prices reacted to that area historically, right? So now price is back there. Let me even drag this down. Oh, sorry. Let me leave it where it is. All right. So now on the daily time frame, we can see that we're beginning to get this bullish engulfing candlestick pattern from here. All right. So that means price is beginning to support my bullish bias. Remember, on the weekly time frame, my target, let's go back and confirm that target. My target is 1.04163. So let's go back to the daily. 1.04163. So I'm expecting to see price come here. So how do I take advantage of this? I need a change in market structure to support my bias. Then I'll catch it on the pullback. Now, how do I do that? I'll go to the 4-hour time frame. All right. So on the 4-hour time frame, meanwhile, let me delete some of this mess I have on my screen. Let's delete some of this mess. Delete everything. Okay. So this is my target. I've been able to pinpoint my target, right? I've called out if once again it's 1.04163. But how do I take advantage of this? Right? I needed a change in market structure. I need a change in market structure. So price, I closed my trade around here this morning when price was trading around here before I went to bed, and price took off, right? Obviously now we have a new higher high. The market structure has changed. Remember, I have a bias, not because I'm the owner of the market, so I'm sure that it's going to go bullish, because price could still go bearish. So, and may not make it to my bullish target. Don't get me wrong. I don't know for a fact if this is what's going to happen, but that's my bias. So, which means I need to now structure my chart in a way that supports my bias. I should be selfish with my bias. So now price is already giving me cues that, hey, I think that my bias is correct after all. I mean, price from here to here was bearish, but look at this, a high equal low. Now we have a new higher high. So you can guess what? I'm expecting a pullback. Pullback into where? Pullback into here. 1.03006. I could wait for this on the 15 minutes time frame or 30 minutes time frame or 1 hour time frame, depending on your confirmation. I'm not here to teach confirmations, right? But now price has already created that new higher high. So the market structure is beginning to support my original bias. Like I said, I don't know if I'm right about the bias, only time will tell, but that's my bias. And so far, so good. The market is giving me the vibe that my bias is playing out. That's all that matters to me. You can have your own bias. This other person can have his own. That's their business. This is mine. I own this, right? And that's what I want to see play out. So all I'm waiting for is a confirmation now on EURUSD. So I'll be looking for buying opportunities around 1.03006. And then when I buy, I don't necessarily have to hold till it gets to my weekly target. I could take 2-to-1s. I love 2-to-1s a lot. 3-to-1, 4-to-1. I don't know, depending on what you want to do. I could even be more conservative when price comes for that pullback. I could get in maybe around here, put my stop loss all the way below last week's lowest area and put my target here. I could do whatever I like. I could put my stop loss below here, which is fantastic since that's where I want to see price come back into and all of that. So it all depends on what you want. All right. On a much lower time frame, you could get a tighter entry with a much bigger risk to reward. You can do anything you like. All right. So that's how far I can go for today's analysis. I think from here on out, I'll still try to stay online, but I'm going to stop the recording in here so that it's not too lengthy, so that we can now go on with questions. All right. We'll stop the recording.